Hello everyone, today is Tuesday, November 17th, 2020. My name is Evan. Welcome back to another midweek stock market analysis video. Let's dive right into our market technicals dashboard. You can see stocks on the day were pretty mixed across the board. You can see mostly negative, I guess, but mixed with the Russell 2000 up about 0.4%. Dow, SPY, Qs all down about 0.4 to 0.5% on today's session. If we look at the 5-day change numbers here, you can see everything in pretty firmly positive territory. The Russell 2000 is in front here at 3.25%, followed by the Qs, the SPY, and then the Dow Jones. If we look at all the major indices versus their key 10, 50, 200 simple moving averages, we are above all of them. Now, if we scroll down and take a look at sectors here, energy, top of the list here, that's what's working, continues to work. Technology up 2.74%. Real estate up 2.72%. We talked about that one in our weekend video. On the downside, we got utilities down 1.2. We got materials 0.34 down, and XLV, which is healthcare, is basically flat over the past 5 days. In terms of major markets, EEM, so emerging markets, long bond, and international are at the top of the list. It's a very curious bunch there. Emerging markets and international, so again, weaker dollar more recently, a little bit of a tailwind for those international stocks, emerging stocks particularly. And then that TLT catching a bid, which hasn't seen in quite some time, so that's kind of interesting there as well. On the downside, natural gas took a big hit this week, down 8.12% over the past 5 days, and volatility VIX down 7.46%. Oil is basically flat. So let's jump into the charts here. Let's take a look at what's going on. This is TC2000. This is our equity market grid. So we've got the S&P in the top left, Nasdaq top right, Russell bottom left, and international minus the US world stocks in the bottom right. Price itself is the white dashed lines you see on these charts, and the colored dots are a custom smart trend filter that we've built. You can learn more about that in the link appearing in the top right hand of your screen. So weekly chart here, you know, when we look at sort of what's different here, two notable changes, or actually three. The S&P in the top left, printing a bullish buy signal once again, sort of resuming that clean up trend there on the weekly chart or the longer term chart is the way we like to think of it. So that's constructive. Again, it went neutral, did never turn bearish here. It just went neutral, which told us that there were some mixed signals. That's back to bullish. Same with the Nasdaq, and same with international down here in the bottom right. All of those three markets on this longer term time frame were being a little bit, we're under a little bit of pressure there, and they are resuming back to the upside. You can see in the bottom left, Russell 2000 has been in buy mode basically for the past 10 weeks or so. So no changes there. Now on the daily chart, we're green across the board as well. So the shorter term trends all in alignment here. We have basically unanimous agreement in terms of trends on short term and intermediate term basis. So let's move to price action. Let's see if price action tells us anything different. Remember, price action is kind of the most sensitive of all of it. It's the very near term, and we measure price action, or at least the way I look at it is I like to measure price action to sort of give me those early clues, or to really measure supply and demand in a more granular sense and kind of fit that into the trend models that we just looked at. So when we look here at the S&P 500, we are at all-time highs, basically, I mean, just underneath all-time highs. Yesterday, we closed at new all-time highs. We pulled back today, so we're down 0.5%. So that is notable. Again, in the very short term, our trend models that we just looked at aren't going to pick this up, but when we look at candlesticks here, we do pick that up. So we notice here today's session was a little bit weaker and left us with some indecision. We couldn't close at the highs. We didn't close at the lows, but we basically, you know, closed exactly where we opened in the middle of today's range. And that sets us up for, you know, kind of a decision day a bit into tomorrow. So I think that's interesting. That's a short-term kind of signal we can key off of. This 35.80 level, that's still on the chart. here, I think that's a pretty relevant upper level momentum strength level, if you will, for this rally. If we, continue to hold above that level, then, it's pretty difficult to be bearish this market. Closing at highs, trends are all up. It's just really difficult to be bearish. But if we start losing 35.80, if we start taking out today's lows tomorrow and we start breaking below 35.80, 35.80 is relevant because it was the prior all-time high here in September, and it's approximately where we opened and sort of got rejected from just a few weeks back, or last week really. So 35.80 I think is important. If we lose that in some type of violent way, that could be an early indication. Again, our trend filter wouldn't pick it up yet, but if you're going to analyze price action, if you're a shorter term trader and you're looking for a little bit, more agile decision making, then that's what I'd be paying attention to. So for the S&P 500, 35.80, that's the downside. You could use approximately today's lows. Start taking that out. You get some warning signs there, but ultimately, the bigger level would be around 35.20 or so. We talked about this in weekend video. This would be the more intermediate term. So if you don't, if you want to, forgive some of the noise here in the short term, and you want to kind of give yourself a little more distance, 35.10 or so, as long as we're above that on an intermediate term basis, you could argue that things are still healthy and bullish. So that's the read. That's sort of the analysis there. In terms of price action, obviously there's no real overhead supply. You have basically yesterday's close and today's highs. You have the highs from 11.9, but not a whole lot of above levels to sort of really analyze. If we go down to the IWM here, this was certainly the strongest. Today was the only index that was green. So Russell 2000 still very much in favor here and seeing rotation. You can see it's basically been pretty straight line move here. It's up 18% in the past 12 trading sessions. So when we look at the Russell 2000, this is pretty extended here in the short term. It's a tough chase if you're in it. Obviously, you want to manage that risk. It's working, so clearly no issues there. If we look at momentum in the top of our chart here, you can see MACD is breaking to new highs today, or reaching new highs. So life looks good here for the Russell 2000. It's helping keep this market move along. It is extended in the short term, but so long as it's basically holding above, I'd call it 169 and change or so. This would sort of be the upper level momentum here that we could pay attention to, would be right in here. Obviously today's lows is a bit of a reference point as well. But all things considered, the Russell 2000, it's extended, could use a breather here, could check back a little bit, but it is what is working. Nasdaq 100, this now is... You can see I was sort of drawing and playing around with this scenario the other day. Let's go to a cleaner board first, but the Nasdaq 100, which should be no surprise, this has been the laggard now over the past couple of weeks, and we can see here that basically it's one of the only indices now that hasn't broken out to new highs. The highs from September up here around 9.2 are still in place. We hit as high as about 297 or so in early October, retested that last week and failed. So we are still essentially in a trading range here, which isn't the worst thing in the world. This has had a tremendous performance here throughout the course of this year, and it's clearly taking a bit of a breather while small caps basically lead this market, and some of the other more beaten up areas, cyclical, if you will, areas of the market. So the Nasdaq 100, though, if you're a believer that technology needs to lead us, and it is such a big weight in everything, and these companies just dominate, global production and trade and everything else nowadays, then, you can be concerned here with the Qs, and you can take a sort of glass half empty approach, because if we look here at the Qs, we've yet to take out, again, the prior all-time highs, and we've yet to actually get back up to last week's highs as well. So this is around 298 or so. You can see we're still kind of inching up here. We do have MACD that is making, that is trying to inch higher as well. So that's mildly constructive, but we're still, kind of really struggling to kind of move up here. And, when you combine that with some other, looking at individual stocks and some of the names that make up this index and these larger cap names that have worked, some of them do look a little bit tired. So, it's really now basically the way we sort of described it is tech is just in a hard place right now. There's mixed signals here. Again, the trend, if you want to look at the just a pure trend basis here, like we opened up the video with, Nasdaq bullish trend on the weekly, Nasdaq bullish trend on the daily. So if you want to avoid any of the noise and tough decision making, that's all you need to know. And until that changes, then you can flip your script. But if you are more agile, if you're tactical, if you're looking for turning points and you want to be, just a little bit shorter term, then I'd be paying close attention to really tomorrow's session here. I'd say if we're going to fail here in the Qs, if we're going to fail to get back up here, I'd expect that it would happen sooner rather than later. You can see this measured move I was sort of playing around with earlier. So, if you take basically this impulse leg down here, so from basically the highs where we opened down to this leg lower, and you project that move to kind of a second leg lower, you can see that kind of comes right back in here and starts to fill this gap. Let's see, actually, is that the right... Yeah, so you can see basically kind of comes right back into this area here. If we fail kind of exactly where we are, you'd get this nice sort of, lined up, neat gap fill. Not saying that has to happen at all. But again, when we look here just at, the smaller time frame and you kind of look at this, grinding sideways here, that if we start to roll over and sellers can actually get aggressive, then, this is going to weigh on the market a little bit. And this is sort of the pessimistic view right now, is that a lot of these strong companies that have set up and continue to work and lead and, keep this market chugging along is starting to look a little stale here. So that's, that's kind of the read on it right there. And again, it's really just going to come up to how agile and how much noise you want to deal with and how short term you want to be. As we mentioned here, the weight of the evidence is firmly in the bull case right now. But if we start to get some type of drop here, if we get a second leg lower for Qs, the entire market will undoubtedly feel that. And, that is something we can, at least keep an open mind about. So hopefully that helps. Hopefully a couple of those scenarios there and looking at those charts helps you navigate the rest of this week. If we go into some of our other markets here, let's go down to a daily chart for the VIX, still basically in a sell signal here. It is, a little bit oversold. We'll look at that in just a little bit. And I actually hate using that phrase oversold for VIX, but I think you know what I mean. TLT, I think, is interesting here because TLT's been just really rough over the past several months. I mean, there's been unforgiven sort of selling or a grind lower, and you can see it's trying to get back above our trend filter again. It's neutral. It hasn't printed a buy signal yet, but it is getting a little bit of a pop here, and it is traded, good amount in this range in here now over the past couple of weeks. So we'll look at that in just a moment. If we go to Commodities here, I do want to highlight this gold sell signal on the weekly time frame, on the long-term time frame. So this hasn't happened in a long time, basically since 2019 is the last time we saw a sell signal in gold, and it was very brief. But basically, gold has enjoyed a nice move pretty much all this year. It's gotten really, kind of sideways over the past many months now, and basically we're getting our first sell signal here in quite some time. So I'd pay attention to that and respect that. It is still arguably range bound over or in the low 170s, mid 170s. But this is starting to lose trend now as it takes an extended amount of time. So I think that's interesting. On a daily chart, you can see it's neutral, but prior signal is a sell. And you can see silver's trying to hang on here as well. It's still acting better on the daily chart. It is neutral, but printed a buy signal yesterday. Weekly chart is still yellow. So silver trying to act a little bit better than gold in recent times. USO here, buy signal on the daily chart. If we go to the weekly chart, actually hasn't turned up yet. So, we saw a nice improvement in USO prices, but still yellow on the weekly chart. So let's jump to really just a few individual names I want to talk about, which is first is just VIX. We can see VIX is back down to around the low 20s. If we zoom out a little bit further, it's about, it hasn't quite got to as low as it was in August of this year. So it got down to around the 21s is where it settled. And then we saw that big move higher, through the end of August into early September. So it isn't quite back to sort of the lows that it made a few months ago, but it certainly has sold off quite a bit. So a lot of that fear has unwound out of this market. 50% drop here in about 13 or 14 trading sessions. That's a lot. That's a big unwind there. So again, if you want to try and read into it and be a little bit of a contrarian, you could say that as a lot of that hedging or protection or uncertainty is now, kind of left the market in terms of pricing via VIX, then you might be looking for some, a little bit of a pop here in VIX going through the next week or so. If we look at a couple of other markets, did want to just touch on gold real quick. You can see, again, still mostly sideways, but, it's starting to just really take its time here. So if it can hold over this 174, then you know what? This life can look good here for the bulls if it does manage to hold, but our trend filter's pulling an early sell signal here. So we'll see what happens with it. It's basically been kind of dead money for the past 4 months. So jury's still out on which way that ends up resolving. If we look at two sectors here, energy, which I'm not going to go into because I've basically, continued to sort of pound the table here on the past few days on this particular sector. It's working. It's continued to work ever since, when we were sort of quote unquote late to the call here. But we did highlight it in here once when it was kind of coming back down and starting to shape up. But then obviously after this big pop here on the 9th, I think you had to be paying attention to it and looking for that rotation, and you're continuing to see it. So energy continues to work, continue to like it. XBI also here closing at all-time highs, tippity top here. So not many sectors closing at all-time highs. We've been talking about XBI. This continues to work. We still indirectly have a position in LABU, which is a 3X ETF. So we are long that ETF. And I think that is it. Looking at my notes, I think that's all I have. So thanks for tuning in. As always, hopefully this was helpful. Did I miss anything? What are you watching this week for the rest of this week? Does the Nasdaq have you concerned? I'd be curious. Are you looking at this and worrying, or do you think we have enough support out there and you're not so concerned? Leave a comment below. I'd love to read them. As always, thank you so much for tuning in and watching. You can subscribe to our YouTube channel or follow us at The Trade Risk. Have a great rest of your day. We'll see you back here tomorrow for some swing trade ideas.